All right, let's get straight to it and look at Bitfarms Ltd. With the markets closed, we are looking at the final print from Friday, November 7th, 2025. The stock, which trades on the TSX, closed at $5.15 CAD per share. It was a pretty quiet day, just ticking down 4 cents or 0.77%. Now, the immediate expectation for anyone looking at this $5 stock is simple. It's a lotto ticket on Bitcoin. It's a small-cap, highly volatile crypto miner that's seen as a high-risk, high-reward gamble, a name you'd see trending on the Robinhood app during a crypto bull run. That's the story. But the reality, and what that $5.15 price tag is completely failing to reflect, is that Bitfarms is in the middle of executing one of the most aggressive and transformative infrastructure pivots in the entire mining industry. That 0.77% daily move is just noise. The real story is happening thousands of miles away in Argentina, where a $400 million bet on low-cost energy is about to fundamentally rewrite the company's entire cost structure and long-term viability. And almost no one on Main Street is paying attention. Let's establish the common ground. For years, the narrative around Bitfarms has been that it's a B-team miner. You had the giants, Marathon and Riot, with their massive hash rates. And then you had the others. Bitfarms was one of the others. For many people doing online investing, this stock, BITF, was just a leveraged proxy for the price of Bitcoin. You'd log into your SoFi Invest account, see crypto was running, and buy some Bitfarms. It was a simple one-to-one correlation. The company was based in Canada, relying on hydropower, and was seen as a relatively high-cost, small-scale operator. This is the expectation, a volatile, second-tier trading vehicle. This is why many serious Fidelity Investments clients, those using Fidelity Wealth Management, would be advised to avoid it. It's not something you'd typically find in a stable Fidelity mutual fund or a Fidelity IRA's account. It was, for all intents and purposes, a gamble. But here's the challenge to that thinking, the reality that the smart money is starting to model. That $5.15 price is based on an old thesis. The new thesis is one of operational excellence and energy arbitrage. The reality is that Bitfarms is no longer just a Canadian hydro miner. They are executing a massive, multi-year expansion centered around a new 210-megawatt facility in Argentina. Why Argentina? Because they have secured a long-term contract for natural gas, much of it flared or wasted, at a price that is almost unbelievably low. We are talking about energy costs that could be as low as 2 cents per kilowatt hour. This is the investment help you need to understand. In the Bitcoin mining business, your only variable cost is energy. Everything else is a fixed cost. By securing this energy source, Bitfarms is positioning itself to have one of the lowest all-in cost of production in the world. This isn't a Me Too operation. This is a strategic masterstroke. While retail traders on the SoFi trading platform are just watching the price of BTC, professional desks using the Interactive Brokers platform are building models on what Bitfarms' cost per coin will be in 2026. And the numbers look staggering. Let's look at the recent stock movement through this new lens. The stock has been highly correlated with Bitcoin, and this recent chop around the $5 level reflects the broader uncertainty in the crypto market. But if you dig deeper, you see moments of relative strength. On days when Bitcoin is flat, but news of their operational updates comes out, like their monthly production reports, the stock has been catching a bid. This isn't the Robinhood stock trading crowd. This is accumulation. This is investors who have done their self-investing homework and understand that the company's hash rate is on a steep upward trajectory. They just reported their October production numbers, showing they've hit over 11.2 exahash per second, or EHS, of operational capacity. This is a 16% increase from the previous quarter. This is tangible, consistent execution. They are actively upgrading their fleet, swapping out older, less efficient miners for new generation hardware, which also pushes down their cost to mine. This is what separates them from the hope stocks. They are delivering. This isn't a speculative bet like Tesla was in 2015. This is an industrial-scale build-out that you can track month by month. So let's talk about the business model because it's no longer simple. Bitfarms is a Bitcoin self-mining company. They build and operate data centers or mining farms and fill them with specialized computers, ASICs, that solve complex problems to validate the Bitcoin network. For doing this, they are rewarded with new Bitcoin. Their entire business is a spread, the price of the Bitcoin they mine versus the cost, mostly energy, to mine it. Their strategy has been diversification. They have operations in Quebec, Washington State, and Paraguay, all tapping into low-cost and, in many cases, green or renewable hydropower. This was smart, but the Argentina project is the real transformative play. This $400 million investment is not just a new farm, it's a statement. It's a bet that in a post-halving world, where the reward for mining gets cut in half, the only companies left standing will be the ones with the absolute lowest cost of power. Bitfarms is making the investment now to ensure they are a survivor and a thriver. This is the kind of long-term strategic thinking that is often missing in the crypto space, which is why it's so notable. This brings us to the future outlook. What are the catalysts and what are the risks? The primary catalyst is, of course, the price of Bitcoin. If Bitcoin goes on another bull run, Bitfarms' revenue, profit, and the value of the Bitcoin on its balance sheet, its HODL stack, will all skyrocket. This stock will move with a beta of 3x or 4x to Bitcoin itself. But the company-specific catalyst is the Argentina facility. As that 210 megawatts of power comes online in phases over the next 18 months, you will see their total corporate hash rate potentially double or even triple from current levels, while their average cost of production plummets. This is the thesis that separates it from just buying a SoFi ETFs or Fidelity ETFs that holds Bitcoin. You're betting on margin expansion, not just asset appreciation. But the risks are enormous. This is not a set-it-and-forget-it holding for your Schwab Intelligent Portfolios or a safe Intelligent Portfolio. Risk number one is execution. This is a $400 million project in a country with a history of economic and political instability. Any delays, cost overruns, or regulatory changes in Argentina could be catastrophic. Risk number two is the Bitcoin price itself. If we enter a multi-year bear market, all miners are in trouble. Their revenue is cut, and they could be forced to sell their mined Bitcoin at low prices just to pay for power and operations. Risk number three is capital. This expansion is expensive. Bitfarms has been strategic, using a mix of cash on hand and debt, but they may need to dilute shareholders by issuing more stock, which would put pressure on that $5.15 price. This is a high-stakes environment where traders are using their Interactive Brokers account and Interactive Brokers trading tools to manage risk on a minute-by-minute basis, something you can't do on a simple Fidelity mobile app. This entire thesis, the bull case, that takes this from a $5 stock to a $25 stock, hinges on that one massive project. I want you to comment below. Do you believe Bitfarms will successfully execute this $400 million expansion in Argentina, or is this a massive capital risk that will sink the company? To wrap this all up, that $5.15 closing price is the market still looking at the old Bitfarms. The expectation is that this is just another volatile, high-cost, small-cap Bitcoin proxy, a name for Robinhood investments in SoFi stock traders to flip. The reality is that this is a company in the middle of a profound transformation. It's an industrial-scale operator run by a disciplined team making a massive all-in bet on low-cost energy to dominate the post-halving mining landscape. The old Bitfarms was a bet on the price of Bitcoin. The new Bitfarms is a bet on operational excellence and margin expansion. The risk is immense, but the disconnect between the old story and the on-the-ground reality is what makes this one of the most compelling and dangerous investment opportunities in the entire public market. Disclaimer: this content is for informational purposes only. It's not financial advice, so don't make any decisions without doing your own research or consulting a professional. Remember, Be smart with your money. If you found this helpful, don't forget to like, comment, and share. Thank you.